You're lying.
Yes, the Qs are both 700. Steve, I bought 1,695s for today. We can talk about that for today. Zero DTE. On the open, they jacked the Qs from 700 to like 705. I was like, you know what? I'm gonna buy 1,000 of these. I had the Opco brokers, and I was like, you know what? I'm fading it. It was VIX expiration this morning.
Yeah, and you got rates like going fucking banana. Pardon my French. We're live. Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined by our macro pro Benjamin Bry and our healthcare biotech pro David Maris. You didn't hear that. We're gonna talk some macro today. It looks like macro is eating everything the last 3 days in the markets. Rates are not happy.
No.
Ben is fading. We got Christmas trees of death out there. I don't know, Ben. Where do you want to start? Where do you want to start with this? We got
There's a
another
lot.
deal with Iran yesterday.
I feel like it was like, the Q1 was really great, and we started off the year and we caught that silver short. Although we didn't make that much money because we took a lot of pain to get to the top, and then we caught it all back in a day. But like the last 5 weeks before last week were insufferable. Like if you were David Maris and you're in healthcare, you had no love at all. If you were Berna or Jeff Mackey in consumer discretionary, zero love. Home Depot hit the 52-week low, blah blah blah. You know, the memory stocks, it was just a ubiquitous rally. So last Thursday, I did a lot of work, and if you guys saw my podcast, like I talked about this in depth, like the option leverage reminding me exactly of last October. If you guys remember October 10th last year, we had a 4% down day in the NASDAQ. And then that was Bitcoin top. That was the Oklo and SMR and all those fake stocks, the Oracle. And then they never came back. Market itself, well, the S&P is an unbelievable product. You should just never short the S&P. You got to do a little more work, figure out other stuff. Never short the SPY, because that just only goes up. That's the rule of the game. And if it goes down,
Did you get the memo?
You have a societal problem if the S&P goes down. Let's put it that way. And I actually put a tweet out about that last night that I had thrown through the Gemini to make it like cute and old. But like I called it the capitalism line, which is the 300-month moving average, and I put it back to 1871. The only times it crossed below the capitalism line was World War One in 1929 and 1945, which is times when capitalism wasn't really working. We had a touch in 74 and a touch in 2008. Anyway, so yes, the bonds are absolutely getting destroyed. I think the Japan market is the market you want to watch. So like the if you think about it from an engineering, yeah, there it is right there actually. So that chart, which you gotta tell you,
Wait. Did you pull that chart out of your front pocket and leave it on your desk with your coffee mug and some cookies?
that's
Or what was
exactly
that?
that's exactly what I wanted you to look at. So earlier this week
I can't even see the chart.
earlier this week I analyzed the Twitter algorithm, and I like basically had Claude analyze it. I had his AI swarm, and like I was realizing what it takes to like get people. So you need to like create some curiosity. So I created this chart from Bloomberg, but then it only went to 1927. Then I took Robert Schiller's data and got to 1871. Then I uploaded to Gemini and I made it look like an old, like something any of us, because we're old, might have just pulled out of our filing cabinet. And then I would have a coffee stain on it, and that was the point. So there's a little like secret for you guys of why. And a lot of people are like, "What the
12
hell?"
trees
And then,
died for that. 12 trees died for that 8 gigawatt chart.
Exactly.
well, you know what? I was a guy.
How many tokens
who,
did
when,
that cost?
when Napster, no, to be fair, I only pay $20 a month for the Gemini Pro because I only use it for images and Notebook LM. So I don't know how many it costs. I definitely got the better end of the deal, though, I'll say. But if you look at the chart, let's get back to let's focus, boys. That is like the percentage. A lot of people talk about the percentage versus a moving average, right? So that's the percentage versus the 300-month moving average. That's a big line, right? Like that's not the 50-day or the 200-day or the 100-week. That's the 300-month, right? That's a big line. And basically, I was like, all right, let's look at that. And then, the interesting thing about this chart is that the last time we were here that wasn't the .com, so only 3 times, was 1956, 57, right when the Suez Canal event happened. So I thought that was kind of cute, and I was like, all right, I'm gonna put that out. So we got oil at 108 on the front month. You got the rates ripping, and you got like basically a situation where the Korean market, which has been the hottest market in the world, has had 4-5% gap down opens in a week. And I can't really have you. I mean, you guys have been in the game longer than me. Do you guys ever remember a country's index doing
No,
4 or
no,
5% gaps in 1 week? I
no.
mean, maybe during COVID. I mean, I
During
guess
COVID, we saw
liberation,
it here globally, yeah, but
liberation. We had.
not with the S&P at all-time highs. I mean, come on.
Well, yeah, exactly. So anyway, the point is that's been the leader. So I think that you look around, the S&P and the Qs aren't telling the story. And I texted David earlier this week about the healthcare, and like there is no bid there. But apparently, David, it's because Trump RX looks like he spun that thing up on Claude and is now taking out your Hims and my Weight Watchers, and like he's just like checking out and getting into the telehealth business, huh?
Yeah, I think that while he was over in China, while he's been doing other stuff, he has whole other teams doing things, which is unlike some previous administrations where it's been difficult to get multiple things done at a time. And so he has, and then they won a big,
Where were the AI agents when Biden was president?
oh yeah, and so you can get a lot more done. And they had a Supreme Court win against the industry recently, and so I think he's been moving with a little bit more surety that he can do stuff. Whether or not this is just like a big cost plus drugs, the Mark Cuban thing, like another version of it. Mark Cuban posted and said, "Look, I don't want to make fun of it. It is a lot like what we're doing, but it's all good. It's all helping patients." I don't know if anyone's actually using it, but it's good to put pressure on the industry. I mean, you've seen a couple $100 billion worth of deals so far this year, and all of that is with excess profits. Like you're not buying those things because so I don't know, the
No, I mean,
industry
look,
can.
I went on the site and I couldn't believe the prices. And like again, because as you guys know, I do a lot of stuff, and I spin out most of my outputs in HTML now. But they all look like that same format of Claude, so everyone's putting the same thing. But I was like, so then you guys just put this out, and then but I looked at it, I was like, I mean, like those prices make you think like, wow, Martin Shkreli had a good idea. Like basically, that these guys are really able to run huge margins relative to costs, right, David? I mean, I don't
Yeah,
know.
I
You
mean,
know much better.
but it's that whole transparency thing, right? So you whatever insurance you have might pay for one drug, mine doesn't. We have no idea. We're both. Let's just say we're both on the same drug fictitiously, and I don't know, is mine costing $30 and yours costing $50? Why your copay? So the transparency is what collapses the whole system, because then people can go, oh, I just checked this site, it costs $3. So
Yeah, I mean, I have no idea. Like again, I call you when I need like advice about healthcare industry. Or the only thing I can know is it's out of favor, and maybe it's out of favor because Trump's put them out of business. But like, bottom line is, and I'll let David like go on to some more intelligent than me just talking about Trump RX. Is that the dollar's going up, the oil's going up, credit spreads are going up, and like you just when you have this kind of situation, and like Jen, can you put up that chart of the 5-year Japanese JGB? It was probably the second one I sent you, Black Bloomberg chart. I mean, this is what the last thing I want to talk about is basically the bond market long end is a function
Ooh,
of expected inflation. Yeah. That I mean, that looks like hymns in 2024 when David was
that
just
looks like
dunking
an
on
equity
people.
chart. That's a bond chart. Eek.
That's a forward rate, so it's the forward rate between the 5-year spot JGB and the 10-year. So that's the expected rate from 5 years over the next 5 years. And I don't
Got
want
it.
to like get into a lecture about forward rates, but like yes, exactly, like that is a pure expectation, right? Like, because no one knows the hell is going to happen tomorrow, in a year. So 5 years from now, definitely not. I mean, maybe we'll just only have agents, and like none of us will have jobs, and we'll all just be like hanging out on the beach. I mean, but the point is this is going to make the BOJ have to act at some point here, or they're a huge energy importer. The Strait of Hormuz situation is impacting the UK, impacting Japan, impacting Korea, impacting the EU, and at some point it's going to impact China. China's well prepared, they're very smart, they're a serious player. Still not yet there, but like, look, I said this before, like it's pretty clear the US, this is our policy. Like they're like, oh, Iran, like no, no. We want the straight close because we're putting the screws to everyone else. All right. Like that's what's actually going on. And like, Trump won't say that, but like that's what's really happening. But the problem is these guys are our allies. And if their bond market is going to go like this and their inflation, I don't know if you guys saw the inflation print, but like they're going to have to do a Jay Powell 2022 move. And if they do that, I mean, people who don't live in the levered finance world won't understand this, but like for a long, long time, you borrow in short end of the curve in yen and you buy anything else, basically. That is literally one of the linchpins of the global financial system. We saw it unwind a little bit in July of 24. Steve, you remember that? I think on
Yeah.
this show, that was our first year of Wall Street Beats. We did a crisis, whatever, because that was when we had Herb Greenberg
Markets are
here, and
melting.
Herb just had too much CNBC in him that he wanted to do markets in meltdown mode. And that, by the way, that was the bottom. The day we did the markets in meltdown mode was the bottom, and then we ripped after that. But like,
Of course.
basically, this is the one catalyst I would give for everyone as a viewer. Keep an eye on this, because if that keeps going, the BOJ is going to have to do something that will set FFX fall off. That will literally unwind the equity and credit markets globally, and that's
Do you think a
driven by
Japan move
oil.
forces a U.S.? Do you think a Japan move forces a U.S. hike?
No, I don't think the U.S. is going to hike. I think they're going to bullshit people and say what they're doing. Waller was on speaking this morning. He didn't say too much, but we're at a hike of 75% by December. That's not happening. And so, last thing I'll say, and then I'll let David talk. In 2008, I had the same thing happen, where it was like the DSO9 euro dollars, not SOFRs back then, was at 97.15. I was long basically the same contract in SOFRs. It was 97.10 the day the war started. Now it's 96. Okay, that went down to 95.70. The bonds ripped. Everyone thought, oh, and there was big inflation, 5% inflation in the summer of '08, if you guys remember. And China was the impetus. This time it's the AI capex boom. And then next thing you know, oil's at 147, and then oh my God, oil's at $33 and rates are back to zero. So like that's my analog, and that's what I think is going to happen. But in the short term, you got to play the game, and if you use leverage, it's hard to like.
So
play them.
let's tie this off with how you started, which was fading the cues. Here is this sounds like a very short term fade if you're just doing it, if you're doing it 0 DT or for tomorrow.
I did, but
I would assume with this rates move is going to be, this thing could have more legs to the downside. Why not take some more duration?
Let me tell you something, because if you listen to what I was talking about in the podcast, and I'm sure I sent you that stuff, is that we have a really tightly wound market, that the dispersion is insane. So a lot of these pod shops, like David's former employer, Balyasny, Millennium, Citadel, blah blah blah, all these guys, one of the big trades on the street is to do this dispersion trade where you go long single stock fall, short index fall. And so implied and realized correlation are near 15, 20-year lows. And so that's why people who are value investors go nuts. Where yesterday, most stocks are up, but the index is down. The week before, the index is up, but it's only a small percentage of the stocks up. And so until the correlation rises, the guys who want to short the SPY are pissed off because that's not working either. But basically what I realized is in these situations, just like that October 10th last year, you can get a real quick gap down. In the Kospi thing I said, we've had 3 down days in a row. Trump shot his wad yesterday of being like, "Oh, we're not going to attack them," and they rallied it into like an index rebalance end of the day. Well, you know what, guys? I'm in the money. I bought a lot of 0DT, and I never do this. QQQ 695 puts, 695.30. It was at 706 when I did that, or 705.50. So let's fucking go. Now I'll let David go now.
Yeah, but so what are you gonna do with those? Just close them out
I'm gonna
today or
finish the
roll
show
into?
and then I'll deal with it. I'm gonna finish the show and deal with it. We'll talk about it
Yeah.
afterwards. Let you go.
All right. Well,
You tell people
don't.
what think about healthcare.
All right. Well, the XLV is up 1.5%, 1.25%. So it just shows you that people are headed to the defensive
defense.
names, and the XBI is down 1.7%. Let's see here.
Yeah, the XBI does not like higher rates.
Yeah, 1.4. So yeah, it's a rate play, it's a risk play. You see the Halion, which I like during bad times. As a defensive name, HLN, doing great, and that's what it's meant to do, is kind of be the counterbalance to some of the other more risky names. But that said, you're also seeing, oddly, some smaller cap biotech names not going down, or specialty pharma names or whatever. And I'll tell you, in my experience, what that is when you see a alphabet down a lot and you don't see these what you might consider crappy companies, like things that you might be short or things that you not going down. Remember, when you run for the doors, you're selling things that you can sell. So you sell the things that you can move if you're a large institution that's trying to manage the day to day. If you're not a super long term, but if you're like trading at the margin, you're not going to sell some thematic idea that you have on a small cap name. You're going to say, well, look, do we need to own $8 billion of Alphabet, or is 7 okay? Now, I own Alphabet. I shouldn't have used that as the example, but that's what I think is going on a day like today. So you see like large, what you would consider good names, facing more pressure than some other crappy names. Now, I don't want to say junky names and then go straight into MANE.
A junky name.
So I had said on the show yesterday that I was starting to do work on a company called Veradermics. The symbol is MANE. They're working on an oral minoxidil for hair loss, and I'm fairly skeptical, and not just because of the real estate here. I'm skeptical because of what they're trying to do. Now, I ran it by two hedge fund managers yesterday, and both said kind of the same thing, that I think you're right, but I'm going to short it the day they get approval. Now, that's going to be a while from now. It's a $4 billion market cap name, and I said, okay, well, that's fine. Let's talk about this. So I'm going to tell you what we talked to you. You mentioned, Ben, what Claude can do. I'll tell you what. I put some LLMs together to work on this. So this is a little bit of my opinion. It's not advice, but it's also what ChatGPT says, or actually Gemini. First, the dose is too high. They're testing. So this is a drug. Minoxidil is a topical drug. It was originally studied as an oral drug, and it is approved as an oral drug, but not for hair loss. It's approved for a cardiovascular thing. So, but there's a black box warning on it because of side effects at the high level. Side effects that can include death. So like not too much
Kind of
hair
a big
growth.
one.
Yeah, and so you can get oral minoxidil from Hims-like companies for hair loss, for growing hair, at very low doses. So right now, those are usually the oral off-label doses are about 0.25 milligrams to 2.5 milligrams. Veradermics is testing 8.5 milligrams once or twice daily, so up to 17 milligrams a day. 17 milligrams a day isn't a microdose. It's within the FDA approved guidance for the severe hypertension oral drug that's already approved. So they try to say that the extended release formulation that they use flattens the peak level, and that the peak level is what causes the side effects. They're going to have to prove that. That's going to be very difficult, I think, that they're going to have to prove that toxicity is driven by the rapid spikes rather than the cumulative exposure. That's a tough one. The second is that so far they've shown 6-month data. 6-month data is great. I mean, it's better than 3-month data. But if you're talking about a cardiac risk, you're going to want to see probably 2 years worth of data, at least 1 year. So they're doing those studies. I'm not saying that they're trying to hide from that. They're going to do them. But until they have that data, I think that the jury's out. And remember, all you need is one adverse event and it's dead. What I mean by that is for a cancer drug, the FDA gives you a lot of leeway. Like if the side effects are really bad, if some people die, but you're extending life, that's great. They'll approve a drug like that.
They'll
There's
take the
no
risk.
margin. Yeah, there's no margin for risk for a cosmetic situation where there are already drugs approved for it. So the minoxidil forces your blood to relax. Your body's hardwire to counteract any drop in blood pressure. So where then it starts with fluid retention, and that's what causes these side effects. Well, I'm not so sure that they're going to avoid that over a longer period of time, so a year or two. So we'll see. The last is if they get approval, which again, these two hedge fund managers were like, yeah, they probably will get approval in this FDA, this very permissive FDA. I can't imagine the FDA is going to remove the black box warning for the active ingredient that they have on a drug that's on the market for a different drug. In other words, 2 oral drugs, different indications, different companies, one but the same active ingredient, one with a black box warning, one without, will cause confusion among the doctors. And so they'll probably, in my opinion, and in Gemini's opinion, that the FDA would at best require a REMS, which is where they follow up on this. A REMS would if you're a doctor, even if you're treating hair loss, are you going to run this risk? What's your insurance company going to say when you start running this risk? So I think if they get approved, it probably won't have nearly the market that they think it will. But if you look at it now, I think that they have some hurdles.
How long do you think it would take for the approval to come through? Is this something that the FDA would push through in the next 6 months?
No. They haven't submitted it yet. They still have they haven't done phase 3 trials. They've done one phase 2/3 trial. They may have done another, but I'm not sure. But phase 2/3 says that, well, we're going to roll into an extension that will then be used as a phase 3. Sometimes the FDA accepts that, sometimes they don't, and so we'll see.
Okay.
But they're probably another couple years away from filing. So that's the risk of a short, is that you have time against you and any good news. I actually take the other side of that and say, you have time, you have expense, you have other products coming onto the market for alopecia. I don't know, at a $4 billion market value, I think it's fairly valued, but it's up today. So so take that with a grain of salt. But it's one that I'm doing work on.
You're looking to possibly fade this.
What did you say? I lost you.
I said it sounds like you're looking to fade this thing on rips.
I shorted a little bit so that it's on my radar now.
So it's on your screen.
It's on my screen. And I'm gonna keep fading this just because I won't get to a full position until after an approval, if there's an approval. So I'll never get to, hey, listen, this is a huge bet. I also think that individual investors it doesn't pay to short stocks. I do it for kind of the intellectual pursuit of it and the
Oh, it's
fun.
fun. It's fun. It's fun.
Yeah.
It's
No,
fun.
Yeah.
no. The only way to make money is to do what I just did. Where, by the way, I my phone died, but I actually sold out of those. It was a 1 hour 3-bagger, boys. That's I wish I could do more 1 hour 3-baggers in my life. But you use leverage. You know, you use swaps or you use options, but that's a hard game to play, and that is not something that the average person needs to even hear from me. But I'm saying shorting stocks, it's just not a great way to live life. Like you find things that have multiples of upside, right, David? Not
Yeah,
like
and
only
also,
100% downside and multiples of downside on the other side, right?
and hopefully I described it well enough that people can understand that somebody might take the other side of that knowing this. And that's another value of kind of going through the exercise of, okay, now at least I know my risk. I'm going to own this because if they do get approved, I think it will go up 5x. I'm just making that up. I don't believe that, but let's just say someone thinks that, or I think they'll be taken out if they get approval. But at least you know the risk. Like I've outlined some of the risks that are there, and you know they may be wrong, right? It's people get approved of drugs. I covered a company that got approval of a drug that I actually believed in. I thought it would be $1 billion drug. It was a reformulation of an existing drug. It was safer than the existing drug, so very similar to this. Got approval. I had taken them public, so I was really happy with that. I made people money, except it didn't really sell. And so they ended up selling out for a fraction of what they went public at. So my happiness at one point is kind of like, but it was a lesson of it's not just getting approval that's hard; it's selling that's even harder.
Exactly. So MANE is the ticker.
Yep. And if you gave it to me,
Okay.
I'd sell it.
Got it. And Ben was short Qs for 5 minutes, and now that's over. So
1 hour.
So there's
No. I
there-
kept half of them. I kept half of them
so
that I
there was
bought
a trade
on
idea
Friday
there,
morning.
and now it's gone.
No. I bought last Thursday. I looked at basically if you look at the implied correlation, the realized dispersion, the realized skew, like we are in a statistical anomaly of a situation, and that is a function of leverage. And you know it as a person because you're looking at the oil market and the rates market and just living life, and you know things are not normal. And so why is the
$7
S&P
gas.
at all-time highs and going up 25% in 5 weeks? Well, I'll tell you why. The Option Clearing Corporation gives unlimited leverage. The repo gives unlimited leverage. So the casino is fully open, and the guys who know how to play the game they printed a lot of cash from March 30th till, I don't know, maybe Tuesday of last week.
Thursday.
And as happens, OpEx is usually when it's time to
And
call
start
it
selling a bunch.
a day on the party. You know what I mean? And this seems to be one of those things. We'll see if Elon can get it to the finish line here. That's what the big question in my mind is. I'll leave it with this last thing is I just saw the savings rates at the low since the GFC. The deficit's at 6% of GDP. It's pretty high and elevated. CapEx is basically only eclipsed by the railroad boom. So you have to wonder where are you getting the juice from here on for earnings growth? Not necessarily in beat up names, so I'm not talking about, but as an aggregate. I don't know. And like clearly with the bond market trading like this, you're not going to be able to be the government and just print money and take it to a 12% deficit without the bond market getting hit. So with all this paper of Anthropic and SpaceX and OpenAI, this is a good shot on goal here to take some
And
cash out of the market, put it in 3.5%, maybe even buy some 5-year bonds or whatever. If you're a boomer, I mean, honestly, a 10-year looks pretty good right now. Like go sail into the sunset with 4.65% and don't even think about stocks anymore.
amen. Wow. What would we
That's
do?
how I'm gonna leave
What
it.
would we do? What would we do all day? So
Well,
Ben, where
that's
is
probably
all
not a
where
good thing, right?
last thought. Where is all this money going to come from for everyone to buy into this SpaceX IPO? They're going to be selling a shitload of Tesla stock, a shitload of Google stock, and Meta, and all these names to get in.
It's weird, right? It's weird, but you can, and a lot of people do not like Elon Musk. I don't get it, especially the younger generation. They do, many of them. I don't get it at all. I in my day, someone like this who does what he does should be applauded. But business wise, but I just don't get it. I agree with you. Like, where is this money? I don't mind when people say, "Oh, my company's worth $1 trillion. I'm gonna raise $100 million and just have a very illiquid name that people will want to be a part of." Those tend to work well. The Hey, I'm gonna float a lot of money. You're right. There's once you get over a few $1 billion, you start to get an issue with liquidity. Like, where do people get that money?
Exactly.
I mean, basically, we did a report on this, and we did the math, and the reason why the Nasdaq and the S&P are changing the rules that they can have these IPOs become in the index 15 days later, which, by the way, is breaking the rule of they got to be profitable, is because there's nobody who's going to buy it. There's no paper, and it's still going to be 30 billion short, which is why Elon magically is like, oh, we're going to let 30% retail come in, which is why I'm so pissed, because last Thursday I looked at a 500, 400 costless risk reversal for June, costless. Tesla's at $400 today. Like, that thing's at like $25. And I don't even know how you divide by zero. But yes, that's going to be a source of funds. But like in general, the people don't realize that what usually ends equity bull markets or credit bull markets is Wall Street. When they and David worked at a bank, he can tell you, when they start selling paper,
Stuffed
sell
it
what
too
Wall
full.
Street sells.
Yeah, no,
You know what I mean?
it's
Like,
the idea. It's like when a year or so two ago, I started getting solicitations of, "Hey, we now have access to this private equity fund or this private credit fund. We can get you in, or we've opened this up to this group of investors." I'm like, wait a second. If you're offering me the SpaceX IPO, guess what? That's not a good sign. I should not be able. I should not be able to get that.
And there was
exactly,
a lot of
exactly. Go ahead,
I was
Steve.
going to say there was a lot of paper transacting on SpaceX privately for the last couple of years. These guys, the guys that I know, a couple of them that taken $1 million and it's now worth $100 million. These guys are not going to have any. These guys are not going to be locked up. There's going to be a shitload of stock coming for sale in that deal.
Absolutely.
I'm going to get all the details wrong, but Ron Barron, who's a great investor, right? I mean, we can't say anything bad about it. There was an article this last week where they say 25% of either his wealth or
No,
his
it's
fund
almost
is
50. It's almost 50, David. I know this story. It's almost 50.
Yeah, and I'm like, is in his fund, because what he's done is he invested early and along the way and gets marked to market every time they raise the valuation.
Yep.
Well, we could all do that. That doesn't make us wealthy. It makes us wealthy on paper. Like, oh, Steve, you want to buy this scrap piece of paper? Guess what? You could buy 1/10 of it for $1 million. You do that. That doesn't mean I'm all of a sudden worth $10 million. So
No, but David, what you miss, which happened in 21, is when the banks lend against your stock, so you can pull cash out and put the stock as collateral. That's where the reflexivity comes in, and they're doing that. People are borrowing against SpaceX. Elon's been borrowing against the stock forever, and like, yeah, you get a big haircut, right? Like, you're gonna get maybe 25 cents on the dollar for that, right? So you're not gonna get like anything close to what you get in a public market, but like, there is definitely people doing that, and that's why I think that right now we have this dump down. It settles like in October when we got that 4% down. We rallied into the Mag 7, and then we had a 3-week dump in November. And look, it's a different situation than it was October, but I'm just saying that I think that's kind of the setup. Like, we've had 3 days in a row of kind of weakness, right? In the Kospi, I told you. Maybe it settles in here shortly. Ron Barron and everybody on the street and everybody who's along Steve's buddy, they want to get that thing across the finish line. They do not want to like have that. So I would tell you, like, I don't believe that the mythical they, like, can do things, but like they're gonna try their best. They're gonna do
They got to
whatever
keep this
they
train on the
can
tracks to get that thing
to
public.
keep this train. And I put that report out, and we did a podcast on it, that I've said it. I think SpaceX is the top, the way Rivian was the top in 21. And there's always a deal, right? Blackstone in 2007, 8, or whatever they came out. Like, there's always a deal that marks the top. And I feel like AOL Time Warner in 2000, right? Remember that? There's always like some seminal deal that's monster that is what marks the top of the cycle.
Where's that Cerberus deal trading from last week, Ben? I saw that thing went out at like 385, and I saw it trading in the 270s, 250s a couple days later. It's just
I mean, that was really aggressive, because that company, 60% of their revenue is in the UAE at a university, and then 20% is another guy. So they have 80. I mean, David, you're a good analyst. You're a better analyst than I am. When you look at a company that has 80, you're in healthcare, so I know it's a little bit different, but like, that's pretty concentrated. You don't really want to put a huge multiple on two clients being 84% of your income, do you?
No, it's you've seen in the last couple years, we should make a scorecard of these things, or bingo card of these things. You've seen a whole bunch of circular deals where people have their customer is also their investor, and you're just seeing more and more of these highly concentrated deals. They're low. They're, in my opinion, they're all lower quality. But you're right. People are getting paid left and right on this. When someone makes $100 billion investment into AI infrastructure, but then the other one promises to do $100 billion worth of purchases, what is that deal really worth? What does it really mean?
right. Circular. All right, boys, let's wrap it up. Happy Tuesday. Thank you, Ben. Thank you, David. Sorry, we're a little bearish this morning, but I think interest rates are now have interest rates and $7 gas have our attention here on the West Coast. I don't know about what David's paying in New Jersey, but
New Jersey.
Well, the good thing is David doesn't have to pump his gas out there.
Land of the free.
Follow us on wallstreetbeats.com. Have a great day. I will not see you guys again until after Memorial Day, but I'll be in LA this week, Ben. So if you're around,
all right, let's hang out.
Okay. See you, boys.
Guys.
Follow us on wallstreetbeats.com, and we'll see you here tomorrow. See you, boys.